Welcome to Mindset Matters, the official podcast of Oregon Realtors. In this podcast, we dive deep into the secrets of top-performing agents, market trends, strategies, tips, and tricks that will transform and elevate your real estate career to new heights. Follow or subscribe today, and stay tuned for a podcast that's not just about real estate. It's about mastering the mindset for success. Welcome to the Mindset Matters podcast. In this episode, we're focused on demystifying homeowners insurance. As we all know, in many states, including Oregon, getting insurance has become a significant challenge for folks wanting to buy a home and for those who already own homes. Oregon Realtors is bringing a variety of insurance experts on the podcast to help clarify issues for Oregonians. Today, I'm joined by Steve Steinbeck, the Executive Director for the Oregon Fair Plan Association, which stands for Fair Access to Insurance Requirements. With more than 30 years of experience on the West Coast, Steve is very familiar with the region's hazards and challenges. Prior to joining the Oregon Fair Plan Association, Steve worked for some very large preferred carriers managing 21 states west of the Mississippi. He has been with the Oregon Fair Plan Association for 3 years, working exclusively with the Oregon High Risk Homeowner Insurance Program. Steve's extensive experience includes managing risk, advanced training with wildfire issues, and helping homeowners to effectively mitigate their wildfire exposure. Welcome to the podcast, Steve. Before we jump into the nitty-gritty of what the Fair Plan is, can you elaborate a bit on your insurance background and how you landed at the Oregon Fair Plan Association?
Yeah, absolutely. So as you mentioned, I spent the bulk of my career working for larger insurance companies and in the property and casualty realm of insurance. So that's homeowners and auto and items such as that. And Oregon Mutual Insurance was my last carrier prior to coming to the Oregon Fair Plan. They're a smaller mutual company, but again, had all the same issues and challenges that a large company would have.
Like what? That's not what we're here to talk about, but it will provide some context.
Yeah. So, profitability issues. So again, having the capability of paying claims when they come through. And so some of the challenges are with the property and casualty line is that the claims have escalated to a point where it's becoming very, very difficult for carriers to be profitable in those areas.
And so are the property and casualty carriers on the preferred side, are their rates regulated? Do they have discretion on what they can charge? Are they limited?
Yeah, so they do have to file a rate plan with the state of Oregon, which is reviewed by the state. And then if approved, then they can implement their rates. Each time that they want to do a rate change, they would need to submit their rate calculations and then again have the state approve those.
So do you know, and I know the Fair Plan Association is not the DFR that regulates the insurance for carriers like that, but what sort of criteria, what's usually on the average permissible for a rate increase?
So in a normal market, we would see rate increases of anywhere from about 5 to 15%. What I've seen
annually, did you say?
Annually, correct. And so what I've seen in recent years is that the indications for rate are much higher than that. And so consequently, insurance companies are having a very difficult time being profitable with the amount of claims that they're paying.
So I assume as they're assessing what their annual rate should be, they look at the amount of claims they paid that year, what's projected potentially for the coming years, what's on their books, where are those insureds, where do they live, what part of the state?
Yeah, so many factors. And again, trying to identify and define risk in certain areas and then have a rate that's appropriate for the amount of risk that they're bringing on.
Okay. So without getting into too much detail on the preferred carrier criteria, let's jump into the Fair Plan. What is the Fair Plan? And when would a home buyer or current homeowner need to access the Fair Plan?
Yeah, so what we're seeing is that there is definitely a difficulty in getting insured in high wildfire areas. With the amount of wildfire activity that we've seen in the past 10 years, the insurance industry literally has spent billions of dollars with some of these large catastrophic losses. Oregon is not immune to that either. We're probably not on the same scale as California, for example, but every year Oregon experiences catastrophic wildfire, and that factors into the amount of premium that we need to collect to be able to pay out on those claims.
So is the term catastrophic Where does that label come from? Who determines whether it's just a fire or a catastrophic fire? Is that a FEMA declaration or some other
Yeah, not
agency?
a FEMA declaration. Usually it comes from the state. So the state insurance division will declare it as a catastrophic event. It usually just indicates that there is not just one casualty, but mass casualties throughout the region. In the event of a wildfire, for example, in 2020, when we had huge wildfires and hundreds of homes were being lost to fire, that becomes a catastrophic event.
So how did the FAIR Plan get implemented? Who thought, oh, let's have a FAIR Plan here in Oregon?
Yeah, so the Oregon legislature in 1971 mandated that the state create a FAIR Plan. Every state, not every state, but many states across the nation have their own FAIR Plan. We all operate independently of each other. But in 1971, the Oregon legislature voted to implement a FAIR Plan in the state of Oregon. And it was just because insurance at that time was beginning to become very difficult to get.
So that's not a federal mandate. Each state can determine for themselves whether they want to require a FAIR Plan program.
Correct. So we have states that don't currently have a FAIR Plan that are considering that right now. Colorado, for example, is just implemented their FAIR Plan. And
So why wouldn't a state have that?
Perhaps their catastrophic exposure has not warranted it so far, but a state like Colorado has very similar wildfire concerns as any state on the West Coast. And so they got to the point of saying, we need to have some supplemental options for policyholders that are having a hard time.
So the legislator said, we're having one here. And then what? Then how did it evolve and how does it work?
So a board of directors was put together and basically formulated the FAIR Plan. The state mandates that every insurer that is licensed to do business in the state of Oregon has to become a part of the association.
Now, what does that mean? I read that every participating company or every company that writes. So when we say companies, we're talking about the underlying carriers, the travelers or the Safecos, not the independent brokerages that consumers probably deal with.
Correct.
So how do those companies pay for membership? How is their buy-in or their contribution amount determined?
Yeah, so the FAIR Plan, thankfully, in Oregon is largely self-funded. We have not needed to assess our member companies in over 30 years. So in a perfect world, we can maintain our own existence without having to tap into the funds of other companies. But if a catastrophic event were to happen, let's say, for example, we had another incident similar to what we had down in Phoenix and Talent several years ago. If we get to the point where it becomes difficult or impossible for us to pay out on claims based on our own funding, then we can assess all of the member companies proportionate to their share of business within the state of Oregon, right? So a State Farm, for example, which is a very large company, would have a higher percentage of participation than a very small company like Oregon Mutual.
So when we say participation, it's not necessarily participation in the FAIR Plan, it's their percentage of participation overall policies they write in the state.
Correct.
So it's because the majority of their policies are preferred type of policies, right? Companies like Travelers.
Generally speaking, I mean, I think some have some higher risk type things, but generally speaking is preferred.
Got it. So when they have a consumer, the potential buyer, that they can't write on their preferred paper, I don't know if I'm using the right terminology, they'll go to the FAIR Plan. Say, let's see if we can get you in here.
Yeah. So
right, or how am I laying that out correctly?
I think you are. So basically the FAIR Plan is considered the insurer of last resort. So what we require is that they exhaust all efforts to be insured in the standard arena. If and when they get to that point of saying, look, I've tried, I've called Travelers, I've called Safeco, I've called State Farm, I've called Allstate, nobody will insure me, then the agent can come to the FAIR Plan. And every agent who is licensed to do business in the state of Oregon has access to the FAIR Plan.
So even if they have access, or the brokerages have access, or you mean every company would have access?
Every licensed insurance agent, regardless of what company they represent, has access to the FAIR Plan.
So if I'm, just as an example, if I'm an independent insurance broker and I write for 5 different preferred carriers and any of them can access the FAIR Plan.
Correct.
Right. Even if they never have had a customer get a plan through the FAIR Plan, it's an option open to all those companies. Got it. So what, as an insurer of last resort, they have to prove they couldn't get coverage through a preferred carrier, what sort of proof do you all require for the home buyer or the homeowner?
So in the best interest of clients, we always ask them to do their due diligence in trying to secure coverage wherever they can. In the end, we require 2 rejects from standard carriers, right? So even though they might have tried 3 or 4 or 5 different carriers, once they get to 2 rejects from standard carriers, then they can come to the Oregon Fair Plan.
Got it. So through their agent, they would apply for a policy through Oregon Fair Plan Association. And as part of that process, the agent would submit 2 rejections, one from whoever, Traveler, Safeco, whatever the 2 preferred carriers are.
Right.
That's part of the application packet to get a policy?
Correct.
So if a homeowner cannot get a policy through a preferred carrier, clearly they've been rejected by a couple companies, and they apply through Oregon Fair Plan, is it guaranteed? Are there minimum qualifications? Can they be denied from the Fair Plan?
They can be denied from the Fair Plan. So it's not an automatic in when you come to the Fair Plan. We have a set of underwriting criteria, the same as any preferred carrier out there. In most cases, we can overcome most of the obstacles that come our way. But for example, we do require in wildfire areas that the homeowner has done something to help mitigate their exposure, right? So they can't just say, hey, well, that's what insurance is for. If my house burns down, that's why I've got a policy.
Right.
We still need to try to protect the financial interest of the Fair Plan and all of the other member companies. And so we do ask that they participate in helping to reduce their exposure.
So when an applicant sends through their insurance broker or agent, sends in an application, do you always do an on-site inspection? I mean, you look at the map where the home's located. Is it zoned in?
Right. We don't inspect everything, but we inspect most of what we insure. And so that does give us the opportunity to see what risk factors are present. So again, if we're underwriting against a high wildfire risk, we would look at proximity of trees to the home, what type of fuels, so dead vegetative fuels, pine needles, dead leaves, anything along those lines that are accumulating in the valleys of a roof perhaps, or along the foundation of a home. We're going to look at all of those things that increase the risk of fire if they're not dealt with.
And do you, when you get an applicant that has some concerns from your end, such as you just referenced, do you send back a conditional denial, yes, saying, hey, do these things, and we'll reconsider? Or
Correct. We do reject the application if it doesn't fit the current standards, but we also let them know exactly what they need to do to get qualified, right? So in the event of wildfire concerns, again, we would tell them, look, you need to remove all of the dead vegetative debris around the house. You need to reduce the clutter. You need to trim the trees so that they're not up against the house, anything along those lines. And so if they can do that, then we can take another look at the risk.
What other rejection reasons are there? I mean, I get the wildfire, that's the current issue du jour here, but we have other issues here in Oregon.
Yeah, there are other issues. So excessive claims would be another reason why someone might find themselves at the Fair Plan. We do require that all open claims be closed before they come to the Fair Plan. We require that any pre-existing damage be repaired prior to coming to the Fair Plan. And so there are, again, some factors that may disqualify them initially until they can get that taken care of.
So with excessive claims, if that's the reason you're looking at a rejection, is it a blanket rejection, or do you look at the basis of their previous claims?
We look at the basis of their previous claims. And again, in a lot of situations, we can overcome some of the high-risk obstacles. But in other cases, if they've had excessive fires, for example, we would look to the cause of the fire. Are they negligent fires? Are they fires that just couldn't be, avoided? Something along those lines. So again, we're just trying to figure out what the overall risk factor is.
Because is the ultimate goal to get these homeowners back into a preferred carrier market?
Yeah, in a perfect world, we would put ourselves out of business, right? So we're not looking to grow. And that's really hard for some agents and companies to understand, is that we would prefer to shrink, because that just means that more customers are ending up in the preferred market where we would prefer to have them.
So let's say the homeowners tried everything to minimize or mitigate the factors for rejection, and you still say, what can a homeowner do?
Agents often have access to non-admitted carriers. So these are carriers that are not admitted in the state of Oregon, but can still do business within the state. A lot of times these non-admitted carriers can take on a higher risk profile. And so there are potentially some options along that line.
What are the risks for a homeowner or property owner to go with a non-admitted carrier?
No risks, really. Most of these carriers are very solvent and financially stable. So not a lot of risk for the policyholder. It just puts them into a different realm of probably paying a higher premium than they're used to.
Why would a carrier not want to be admitted in Oregon? Why did they choose to remain non-admitted? Or if they tried to be admitted and the insurance division said no can do? Is that a company choice or?
Most of the time it's a company choice. If a company wants to come and do business in the state, they do have to apply through the state and be appointed as a carrier.
So a non-admitted carrier would still have to go through that process?
They would have to go through that process only if they wanted to become an admitted carrier.
It seems odd that a non-admitted carrier can write business in Oregon, but they're not admitted. But that's permissible.
That's permissible, yes.
So ultimately, if someone's rejected from the FAIR plan and they can't get a non-admitted carrier, does that mean they just have to self-insure?
There are private persons that are sometimes willing to underwrite a risk and provide coverage. But it becomes difficult. So our desire really is we want to insure everyone that we possibly can. But if it's truly uninsurable, in other words, the risk is so high, the probability of a loss is just not if, but when, then we have to step back from those as well.
Is there a deductible with the FAIR plan?
Yeah. So like any insurance company, the amount of coverage is considered. So how much coverage?
The amount of coverage. What can I get? I need a FAIR plan policy for my dwelling.
Yeah. So for dwelling, we insure a maximum of $600,000. So that's for all aspects of the risk. So the home, any detached structures they might have on the property, and any content coverage that they want to have. So $600,000 is the most that we can write through the FAIR plan. We do have access to facultative reinsurance, which allows us to entertain risks that are even higher than that. All that means is that Oregon FAIR plan would cover the first $600,000 in the loss, and then the reinsurer would step in and cover the remainder.
And is that up to the homeowner if they want to buy that extra reinsurance? Or is that if I have a home that's valued at $1.5 million, obviously 600 is not going to cover.
Yeah, and so
would I be required to get that reinsurance?
Not required, no. It's just something that's available, right? So if you've got again $1.5 million on value of the house, we can certainly insure the first $600,000. The rest can go to reinsurance, but that's a choice that the homeowner needs to make. Reinsurance is not cheap. Yeah. I will say that. Again, the higher the risk, the more money. Premium is going to go up. Correct, but it's an option. And so we do have houses that have $1 million in extra coverage through reinsurance, and then the $600,000.
And do you look at that at all when someone applies, or do you say, "Yeah, we see your house is worth $1.5 million. You only get $600,000 through us. So regardless, that's the max you can get from us when you have a loss."
Correct. Right. The agents would tell them that. And then we offer to the agent the option to go with facultative reinsurance.
Got it. Is completely not connected to the Oregon FAIR plan, the facultative insurance, other than you might have a relationship.
Right. We've got a relationship with the reinsurer. And so when our underwriter looks at the risk and determines that additional coverage is needed, if they feel that the risk qualifies, they'll contact the reinsurer and then start that process. So we serve as a conduit between the reinsurer and the homeowner.
Got it. So over the 3 years or so you've been with the FAIR plan, have you seen policy numbers increase? And it may change by county, where are numbers on homeowner usage of the FAIR plan?
Yeah, so not surprisingly, we're seeing huge increases in wildfire designated areas, right? So Deschutes County, Jackson County, Lake County, and any of those areas that are heavily populated with forested areas.
So do you have an example, a comparison? And I know I'm not going to hold you to the exact number, but if you issued a policy, $100,000, what would I pay the FAIR plan versus if I had a policy with a preferred carrier?
Yeah, that's really difficult to say because there's so many factors that go into a rate. So proximity to fire stations and water and type of construction and so many different factors go in. So can't really compare. I would say that our coverage premium wise is comparable to the standard market, but I would caution you because what we provide is far less than what the standard market provides.
But I would only be coming to you if I couldn't get in the standard market. But is generally speaking, is the premium higher with the fair plan for less coverage? Because you're
no, I would say it's in the ballpark of what a standard carrier would charge, but again, you're getting
less coverage.
Far less coverage.
Yeah.
Correct.
Yeah.
Right.
I did see on your website your mission statement. I want to ask a question about that. The mission statement for the Oregon Fair Plan Association is to make essential property insurance available to responsible applicants in Oregon when they are unable to secure coverage through normal insurance markets. I was curious about the responsible applicant language. What is considered a responsible applicant?
So that again would be the person that knows that they live in a high wildfire area. They've done mitigation. They've cleared the concerns around the house. They've installed non-combustible parameters around all of the buildings on the property. They've trimmed up their trees. They've incorporated succulent plants that are fire resistive.
They are fire resistant? I don't know. You look at some of those fires. What in the world is fire resistant when they're that powerful?
Well, everything helps, right?
Yeah.
So again, in terms of fire resistant, if an ember were to land on a succulent plant versus a pine tree, for example, the pine tree is going to be much more flammable than the succulent plant. So
that's interesting.
Yeah.
Okay. All right. So what do you recommend for our members, our realtor members that have customers, current or prospective? I'm being non-renewed. My company's canceling me. I don't know why. I tried to call 2 or 3 other carriers. They won't write me. What do I do? What would the steps be that you would advise our realtors to share with their customers?
So I would advise them to share what some of the mitigation factors are. What can they do to make the home more insurable? There's some really good websites out there. Firewise.org is one that gives all kinds of information on what a homeowner can do to help reduce their risk.
I did look at the website you suggested where they had the example of the home that was hardened.
Right, the Firewise hardened home versus the other ones. And you can clearly see in that example how quickly the one house caught on fire and how the other one just kind of never caught on.
They make it look so simple. Like you just do this and you are safe. You could just sit in there and watch the fire go by.
Yeah.
But those are really helpful.
Absolutely.
So is there anything a homeowner can do? Let's say they have coverage through, and I'm only using this as an example for discussion's sake, the State Farm. And the State Farm says, I'm going to cancel you or we're not going to renew you at your renewal because you're in a wildfire zone. Would they also tell the consumer, here's what you can do for us to reconsider renewing your policy? Or is it just sometimes there's nothing they can do, even if they take steps?
Yeah, so the state does require them to be specific as to the reason for non-renewal and what steps can they take to mitigate some of that. So again, we're trying to educate homeowners as to how insurance works and what options they have to stay insured in the standard market.
When it comes to those steps, yes. How about when they get the letter that says, we're renewing you, but your premium is going up 30%? They could shop around and see if they can get it cheaper, but there's not much is there anything they can do to decrease the amount of their annual premium?
No, I mean, they could consider things like a higher deductible, so if they want to self-insure more, they could take their deductible from 1,000, for example, up to 5,000 or 10,000. So the higher deductible can bring down the premium a little bit. They can look at the amount of coverage just to make sure that they're not overinsured, right? Because a lot of times we project what we think the value of a house is, and that can change over time, as you know. If the house is overinsured, they can, look at options of reducing coverage.
So there's a lot of steps they can take to try to reverse maybe a preferred company's decision. But if all else fails, we have the Oregon Fair Plan.
Correct.
And hopefully that will at least get them coverage while they get back to a place they can move to a preferred carrier.
Yeah, and our preference is just to kind of be a short-term holding spot for them while they work through whatever
What is
issues.
short-term holding?
Well, I mean, we would like to see them out of the Fair Plan within 2 to 3 years. Oh. So obviously they can stay with us as long as they need to. But again, our goal is we don't want to grow. We want to get them back out into the standard market at their first qualification.
Okay, one last question. For those homeowners, since you have up to $600,000 coverage, if they have a mortgage, I mean, their lender can say, that's not going to be enough. You must purchase if it were my collateral, I would want to make sure it's insured. They're also limited to what their lenders are requiring for insurance too.
Correct.
Right? So
Correct.
Sure, you get 600 here, but that's great, homeowner, but that's not going to work for us.
Right.
You got it. So there's a lot of factors to consider, but like all things, preparation can help mitigate the bad drama.
Absolutely. Absolutely.
Got a long ways to go with all the wildfires and insurance and improvements and educating the consumers out there. Thank you for being here today, Steve. Is there any parting words you'd like to share with our listeners?
No, other than just sometimes I don't know if realtors or even agents know that we exist. So just making sure that they understand that there are options out there for their clients. I will also mention that we have a very informal relationship with a company called Access 180, which provides what we call a wraparound policy. So again, I explained to you that the Fair Plan coverage is minimal compared to what you would see from a State Farm or Allstate or some of those other bigger companies. Access 180 can do a wraparound policy. So they'll let us write basically the risk that they can't handle, in most cases wildfire. We'll pick that up to the Fair Plan, and then they'll put all of the other coverages back on, making it the equivalent of what we call an HO3 policy.
So that's a preferred carrier that covers more than your just
right. And in most cases,
that's what you mean by facultative insurance.
No, that's completely different.
Well, we'll have to cover that next time, because I think the Access 180, that's additional gap coverage.
Yeah, it's a completely different company. We're not affiliated with them at all. They just take our base policy and then they add all of the other coverages back on. So it's as if they were insured with a State Farm.
Got it. So it's almost like I hate to say you don't exist, but they make it so that they become the preferred carrier.
Correct.
Got it. Yes. I see. So thank you, Steve. There's so much to learn about insurance and the Oregon Fair Plan, and we appreciate your time here today and look forward to ongoing discussions and educating our realtor members and consumers alike so they know the Fair Plan exists and what they can do to avoid accessing the Fair Plan.
Absolutely.
So thank you for your time today.
My pleasure. It's good to be here. Thank you.